Joining us on the markets right now is Kari Firestone. She's the co-founder and chair emerita. Emerita?
Emerita.
It's emerita. It's when it's a woman?
Yeah.
I did not know that. Chair emerita. Yeah. She is the chair emerita of Aureus Asset Management. She's also a CNBC contributor. And Kari, it's great to have you on set today.
Thanks very much, Becky.
All right, let's talk about what we're seeing in the markets right now. You think that we are on the verge of a pullback. How big of a pullback are you anticipating?
Oh, I don't think it's going to be much of a pullback. It's just we had a setup that was just too incredible. When people are talking about it's a perfect market, everything is going to the upside, but you've had the market just surge. You know, the S&P 500 up 29% since April 8th, and the NASDAQ up 40%, NASDAQ 100 up 37%. It's hard to keep that going without some pullback, particularly when half the people who trade are away. So this is natural, it's healthy, it ought to happen. 5 to 10% would be reasonable, but we expect people to start buying, which they began to do yesterday afternoon.
I was going to say, we keep talking about this pullback and these tech stocks that are under pressure. The NASDAQ is not even 3% from an all-time high. So it's hard to look at this and think that this is a serious pullback. And understandably, there are some stocks that are down quite a bit more than that.
Sure.
But if you're looking at the major averages, this does not look like the beginning of anything just yet.
Yeah, it's really impossible to have the market only go in one direction.
Yeah.
So we need a few days that it goes down and then it'll go up. But people have forgotten that the market is two-sided. There's ups and downs.
Well, that's what I wonder. There's so much money on the sidelines and so many people who've been waiting to get back in. Do you think we'll even see a 6% pullback? Because once you get to 5%, I wonder if that just triggers people to say, oh, I've got to get in on this.
There would have to be a trigger for that.
Yeah.
So if the market was very disappointed by what Jay Powell says, if he's very hawkish, which is doubtful, that could be an incentive for people to sell. If perhaps we see something with NVIDIA earnings that are extremely disappointing.
So things are priced to perfection right now.
Yeah.
Your point with this.
So those are the reasons. You need a catalyst. You need to see the jobs number be very, very weak, implying there'd be a recession. Recession is the fear that people have forgotten about recently. You know, they assume it's all right if inflation stays, you know, if it's 3.5% to 4%, we can live with that. But if the jobs number gets extremely weak and consumers stop spending, there's a problem. On the other hand, you've got these Mag 7, or however many we're talking about, who continue to go higher, but their earnings were incredible. The fact that as a group, the earnings grew 23%, when these are the biggest companies in the world, and they had the highest profit margins, and you can't stop them. And they now seem to have insurance that they continue to expand because, you know, if NVIDIA makes a deal with the government about 15% of our sales from China we give to you, well, they can make all kinds of deals. Right. They can protect themselves on the downside from, you know, whether it's antitrust, anti-competitive behavior, it's restrictions on foreign employees. There are deals that they can make, which they're the only companies able to pay as much money as they can. And I think that that's worth something to those stocks and to the market as a whole.
Which of those stocks do you like? Or which do you own?
We own Meta, Amazon, Google, Microsoft, Apple, you know, Broadcom right now.
Okay, so that's most of the Mag 7.
Correct. Yeah.
And is that a bigger concentration than you have in other areas?
Oh, it's definitely. Those are our biggest positions. They're 29% of the market cap now. Okay. You know, they're growing their earnings 23, 24%. They have profit margins of, you know, 40% on average operating profit. And it's hard to see why, if you look at the history of the S&P, these companies should have such concentration. But we feel it's justified because of how powerful they are. You know, they are ubiquitous. They don't have the restrictions for geographic, you know, region because of the way that they conduct their business. Their service is digital, and there's no stopping their scope, right? You know, you might use another search engine, of course, but search keeps growing.
Let me ask you about the consumer, because that is what people are watching for. Will the consumer pick up and be spending through this? What did they do in July? We're going to hear from Walmart today. We heard from Target yesterday. What's your overall sense of where the consumer stands right now, and do you own any of these stocks?
So we don't own any of the consumer staples, and in terms of retail, not particularly. We own Amazon, we own Booking Holding.
Okay.
Now, we're close to them. We know these companies. I think that the Home Depot numbers were a relief. Things weren't as bad as expected.
Right.
So the stock went up, but were the numbers good? Not very good. I think same-store sales were up 1.3%.
Yeah.
The Target numbers were weak. I mean, justified. I mean, that's in the doghouse, that stock, and it takes years to get out of it, like Nike. The Walmart numbers, I think they'll be okay, but mostly because of grocery. The consumer doesn't really want to spend excessively, particularly at the lower end. TJX, those were good numbers, but that's a bargain company. People look for the bargains and they have the right prices. It's amazing how that stock continues. It's like Costco. But we don't feel great about the consumer, but the consumer has not fallen off a cliff because people are still working. They have jobs. They have discretionary income. They just don't have as much of it as we saw with like Estee Lauder. Bad numbers.
Right.